The easiest way to explain it is to imagine a safety deposit box containing a Krugerrand listed on the JSE. That, in essence, is what a Kruger Custodial certificate is. We don't have actual safety deposit boxes containing Krugerrands listed on the JSE. How it works is in a vault, we have clearly identified Krugerrands, 1 ounce coins, and each coin is then represented by a certificate on the exchange, and that is what is traded. The big difference is when you have a Krugerrand, a physical Krugerrand, there's a bit of a hassle in terms of storage and insurance, firstly. Secondly, when you have a hoard of coins stored at your house and you need liquidity against that, you want to make it into cash, it's somewhat difficult and problematic. First of all, you need to find a buyer on the other side, and then there's a bit of wrangling about the price that you're going to be getting for it in terms of numismatics, premium, etc. Now, the benefit of having a coin on the exchange is we store and insure the coin on the investor's behalf, and secondly, we provide full liquidity against it should you wish to exit. Now, to see the utility, or to get a good feel of what the utility of that liquidity is, when you deal in physical coins, there's typically, when you sell the coins, most of the dealers are only happy to give you the bullion value of the coin back. However, when you purchase the coins, you pay up to 4%, well, depending on your dealer, up to 17% as a numismatic premium. So you can imagine that there's it can be quite a costly exercise if you buy and sell coins on a physical basis. On the exchange, we show typically on a worst case basis, a 1% bid offer spread, which means if you buy the coin and you sell it immediately, there's the transaction cost of 1% that applies, which is a lot better than the type of premium or the type of spread that I just mentioned. Your risk profile is one of physical ownership. If you will recall, the typical structure of ETFs worldwide is one of a debenture against the company whose only asset and only liability is gold, and then the debentures issued against them. So you don't have the direct ownership profile. This product gives you direct ownership. The coins belong to you. Ownership transfers on day one. The difference, though, is since it's been vaulted on your behalf, you don't have to worry about the storage factor, and secondly, it's also insured on your behalf. So that is taken care of, and then, as I mentioned, you have full liquidity against that. So it gives you the benefit of physical ownership without the hassle factor. If you want to take physical possession of it, because it already belongs to you, ownership transfers on day one. If you want to get them into your possession, there are one of two ways in which you can do that. If you are in possession of, or if you own more than 1,000 of these securities, you could just phone us up, and we will make arrangements for you to collect the coins at the vaulting company. If you've owned less than that, then it's also relatively simple. Just give us a call, or your broker will give us a call, mentioning the fact that you want to take physical possession of the coins. What we will then do is we will exit your KCC position, and we will trade it into a physical coin, also via the JSE. And then we'll make arrangements for you to pick up the coins at Rand Refinery or wherever. So it's perfectly possible, and also very cost efficient if you do want to take physical possession of your coins. It's a question of reducing or making the trading cost, the transaction cost, as low as possible, firstly, and then secondly, making sure that whatever volume the market wants to trade, we can show a price in that. So at any given point in time, we show a double on screen, which means if somebody wants to buy coins or buy a security, we always have coins available for sale, and if somebody wants to sell, we are always in the market to buy back, and that is a guarantee. So in terms of returns, Krugerrands really are the best performing assets in South Africa. They have been over the last 50 years. They've been over the last 40 years, definitely. If you think back in 1967 when Krugerrands were first launched, you could buy a 1 ounce coin for 17 Rand. Today, a 1 ounce coin costs 18,000 Rand. So that's a return of more than 100,000%, or 14% per annum compounded for 50 years. That's quite formidable. And then since 2010, it's been less spectacular, but it's still been quite significant. 2010, in all probability, I'm talking in a correction year, but probably in 2010, coins were trading at about 9,000 Rand each. And then, of course, we've seen quite a rally in gold price, and then the Rand has depreciated substantially as well. So from 9,000 to 18,000, value doubled over a question of 7 years. So that's quite good. The beauty of Krugerrands is the fact that their value derived from the intrinsic value, the fact that it contains gold, which is different from financial securities or even paper money, cash. With cash, you're depending on the central bank to make good its promise to protect the purchase power, which internally or domestically is to keep inflation within a specific band, and externally to protect the external value of the currency, which is the exchange rate. Now, if you think about it, one of the highest, most highly regarded central banks in the world, the Federal Reserve, over the last 100 years, they haven't been particularly effective at protecting the purchase power of the dollar. Today the dollar's value is basically, or $1 can buy you by about 5% of what it could buy you 100 years ago. So it's lost 95% of its value in 100 years. One of my favorite sayings, in this regard, is by old Voltaire. He said that paper currencies invariably go to the intrinsic value, which is zero. You have a piece of paper, and I mean that's been the case over thousands of years. So gold really has pedigree when it comes to wealth preservation, and that really, I always say, gold. It's always a good idea to have gold in your portfolio. It's just a question of how much. And I mean, there's been numerous studies done with World Gold Council, both for individuals, for funds, pension funds, and of course for central banks. And it's been estimated that anything between 5 to 20% is a good level as a portfolio allocation for gold. I mean, back in 1982, most of the pension funds in the UK still had 20% of their assets allocated to physical gold. Of course, it's changed since then, and I think many people, it wasn't necessarily the impact of that change hasn't necessarily been a good thing in terms of returns. But there is, I think there's a recognition these days amongst the fund managers that there is real utility in having gold in a portfolio. If you think about the traditional reasons that people give for including gold in a investment portfolio, it's first of all portfolio diversification, because gold isn't correlated with anything, not even inflation. Although that's one of investment orthodoxy's prime rules, that there's a positive correlation between the gold price and inflation. It's not necessarily the case if you look at it mathematically. The second reason why gold is normally looked at as a good idea for inclusion in portfolio is it provides very good catastrophe protection. For the very reason that I mentioned, its value is intrinsic, and it is perfectly liquid. You don't need a very sophisticated financial system or a very sophisticated payment system to do transactions or to enter into transactions with gold. In fact, you don't need any infrastructure. So it stands completely separate from the whole financial system, which makes it quite a desirable asset. Over the last week, gold once again, Krugerrands, once again showed its utility as a rand hedge. The currency, as we all know, depreciated almost 20% in a period of 1 week. So if you had rands in a bank account, then in terms of dollars or in terms of hard currency, and ultimately also in terms of purchasing power, you are 20% poorer than you were last week. However, if you had some Krugerrands in your portfolio, you would have remained in the same position. In fact, you would have been slightly up, since the gold price in dollar terms have also increased. So it just goes to show that gold is, it's a good store of value. Actually makes me think of a conversation I once had with a gentleman that was quite active in the 1980s in the South African financial markets. And if you recall, back then we had very strict exchange control. So South African residents couldn't take any money out of the country. So international or foreign investors, they could depend on the financial rand and the commercial rand differential to get cash out. Well, they used the financial rand to trade or to liquidate the currency and then take it, or liquidate the investments, take the cash out of the country. Whereas South Africans had to use the commercial rand. So back then, a good indication of political risk was the differential between the financial rand and the commercial rand. South African residents didn't have the same ability. So back then, your only hedge against South African political risk was Krugerrands, because there weren't any restrictions on those. So the premium of Krugerrands above the bullion value, that used to be an internal benchmark for South African investors for the political risk in the country. So whenever there was a lot of political flux, then the numismatic premium would open, and then when things calmed down, it would reduce again. So South Africans have a long history of using this as a way to protect themselves against political risk. Well, we are always on screen at 4% if you buy. So if you buy a 1 ounce Krugerrand, you pay 4% above the price of a 1 ounce of gold. If you sell your coin back to us, typically we show a 3% numismatic premium. So in the process, there's a 1% loss. But if you recall, I just said over the last week, you would have been 20% up. So 1% of 20%, 1% is substantial cost, but it still pales into comparison with the return that you would have made. And it's actually it's a good question that you ask, because Krugerrands have the distinction amongst the bullion coins of the world of having the lowest numismatic premium. If you buy British sovereigns, which is also a very popular and a very old bullion coin, then you can pay up to 20% in numismatic premium. Coins like the Canadian Maple Leaf and the American Eagle and some of the other coins, they trade at a numismatic premium of 10 to 20% as well. Whereas the Krugerrand, if you buy it new, you pay 4%, and you typically get that back as well. So Krugerrands, really, if you want to take a view on gold, then probably the most cost-effective and least risky way of doing so is via the Krugerrand. Just a final thought. The Krugerrand brand is actually a particularly strong one. I think in a recent survey, well, last year, it was indicated or found that Krugerrands, the Krugerrand brand is one of the 50 most recognized and valuable brands in the world. I mean, up there with Coca-Cola and Microsoft and the US dollar and any other brand that you can think of.